The following is an update and technical analysis on Nvidia Corporation, a company of the semiconductor sector here off the weekly interval, so the much larger picture to the technical dimensional sphere. And we are trading within some pretty key pivotal transitioning points, most notably on the daily, where I had created a video recently describing some of the bearish technical posture and damage that were occurring within the technical momentum indicators with bearish and negative divergences correlated with bearish continuation patterns and a dark cloud cover, most notably on the daily interval. And wow, how the headlines recently that have rocked the company space within the co-founder and CEO of the company, Jensen Huang, that has been actively selling his holdings within the company stock. And according to reports filed within the Securities and Exchange Commission, he has now executed a sale of 60,000 shares during the trading sessions within September 12th and the 13th. Altogether, some of these transactions amounting to a substantial 26, close to $30 million in stock sales. Within the preceding week, the CEO had also liquidated approximately $42 million worth of stock by exercising options within his shares. While the company remains a prominent leader in the field of graphics processing units and artificial intelligence, these recent actions by its chief executive may raise concerns and some red flags amongst certain investors and traders alike. And we, I believe, are at a critical juncture. Here off the weekly that has changed since my last update are these divergent high and negative and bearish steep divergences that have now notably constructed amongst all four technical momentum indicators with a beautiful looping gaping crossover here on a bearish crossover, confirmed bearish crossover on the stochastics 1033, and that has another one of my early indicators within the technical realm. Now zooming you into the daily interval, where I had mentioned this dark cloud, pretty well-defined, aesthetically looking well-defined dark cloud bearish continuation pattern, where we actually ended up having a snapback counter-turn rally, only extending these negative and bearish divergences here. And I had continued to hype and harp this primary reactionary uptrend line here off the beginning of January reactionary lows, and this was a monumental key inflection point, in my opinion, with just a ton of reaction right across the entire sphere here, which needed to be withheld and defended heavily by long traders and or bull traders. And today we had that beautiful red solid daily candle close for a 4% crash today, and that is just right on the 438, closing right on the 438 price support, sinking right below its 50 exponential and 50-day moving average, called that dual line of resistance, where some of these negative and bearish divergences have, again, just been constructing on a much, much larger scale, going back since really the beginning of the summer there, with a bearish crossover here in the oscillator, price percent oscillator, honing in to retest its zero line thresholds with just a series of red candle closes below the zero line thresholds here in the oscillator histogram. We have this huge volume at price profile range. And again, I believe the 438 price support is the next price support to watch, with, again, gap support on a complete backfill of the gap. Nothing but clean reactionary highs and lows to help strengthen the validity of that price action. And I believe the 438 goes. We could, again, have a nice up on Monday, a nice steep counter trend snapback rally right back into the bottom of that trading range in the all-out back test scenario for a dead cat bounce, offering an additional objective short trade entry, if not an add-on to your existing position, for an additional much larger drop to the downside and a beautiful risk-reward ratio down to the 236 fibs retracement. Taking away all the lines here, and I will take you down to what I see right off gunning with the 236 fibs retracement. I believe will be the most pivotal inflection point. If we take out the 438 price support, we will have confirmed undercut of the oscillator here, down price percent oscillator, gunning and chopping down below its zero line threshold, more than likely putting in even larger red candle closes below the oscillator histogram. And I would only suspect some sort of stops, margin calls to be hit, and a prolonged move on a retest of the 236 fibs retracement correlated with the 404.73 price support. And that is the 236 fibs retracement within the daily interval and within the weekly interval. Call it a 413.10 price support on the 236 fibs. And that is very closely aligned and synchronized there with, again, the 236 fibs retracement here off the daily interval. And I would only suspect some sort of bounce. That would be another close to 7-8% crash to the downside, and a potential revisit and or snapback counter trend rally. Again, if you're a long-term investor utilizing the dollar cost long-term average strategy, these are your key inflection points to hone in on and buy at the 404.73 price support, 413.10, 372.18, and the 352.382 fibs retracement. And then I have a much larger primary reactionary uptrend line here off the October reactionary lows of 2022. That would be additionally my last and final target if and when we go on to retest that key inflection point, which would be an additional 20%, more than a 20% crash to the downside. and that would correlate with long-term dollar cost averaging sales on a great 20% discount if you are a firm believer in Nvidia Corporation in the long term. Additionally, the 306.66, which will again be correlated with the 200-day moving average upon that primary uptrend line. Say what you want to say about the king of the semiconductor space, but in the near term, this is as great as a daily solid sell signal close here within the daily interval as you can possibly get, only increasing the odds with such a huge volume at price profile for a much larger steep drop or move to the downside, only creating a extreme panic and an all-out rush towards the emergency exit doors.